Good evening and welcome. Thanks very much for tuning in to this special broadcast ahead of Budget 2026. I'm Padmaja Joshi. The budget is expected to set the growth agenda for a Viksit Bharat. The finance minister today tabled the economic survey. India continues to be the bright spot at the time of global uncertainty. Its economy projected to grow at 7.4% in FY26 and between 6.8 to 7.2% in FY27. The survey has also outlined how India plans to navigate a turbulent global economy, including tighter US tariffs and uncertainty around AI-led growth. Chief Economic Advisor V.A. Anant Nageshwaran said that Swadeshi is a legitimate policy instrument when trade is no longer reciprocal and the market is no longer neutral. While India's growth momentum remains intact, the survey also lays out the challenges for the Indian economy. It says the financial sector regulators must walk a tightrope to balance growth with stability.
ये बजट सत्र है 21वीं सदी का एक चौथाई हिस्सा बीत चुका है। ये दूसरे चौथाई का प्रारंभ हो रहा है और 2047 विकसित भारत के लक्ष्य को प्राप्त करने के लिए ये महत्वपूर्ण 25 वर्ष का दौर आरंभ हो रहा है और ये दूसरे क्वार्टर का, इस शताब्दी की दूसरे क्वार्टर का ये पहला बजट आ रहा है।
Real GDP growth pre-COVID was 6.4% and in FY25 was 6.5 and this year, as I said, Mosby is predicting 7.4. Private final consumption expenditure growth is 7% for this year on top of 7.2 last year. And in real terms, gross fixed capital formation is going to be a lot better than FY25 and definitely much better than the banking and corporate balance sheet crisis-ridden 2012-2020 period when it grew only 6.3% on average per annum. More importantly, we are achieving these high growth rates, consumption and investment spending amidst very moderate inflation environment. This year, it is projected to be about 1.7% on average so far for the first 9 months of the year, largely due to a deflationary trend in food price index. However, it's important to note that core inflation is also well behaved.
All right, and joining us now on the show, we have Dr. Ratin Roy, economist and former member of the Economic Advisory Committee to the Prime Minister. Dr. Rumki Majumdar, economist with Deloitte India, is also with us here in the studio. We have Harsh Madhusudan Gupta, author and public markets investor. Dr. Prosenjit Bose, economist. Mr. Samiran Chakravarti, chief economist at Citi India. And Pranjal Bhandari, chief India economist and strategist at HSBC. Dr. Ratin Roy first. The survey projects a growth of 6.8% to 7.2%. Do you think this is overly optimistic given the situation that the world and we are in right now?
Not at all. And I think the CA has done the right thing by building in a growth slowdown because 6.8 is less than the growth this year. So he has sort of accounted for the fact that growth may be lower, but given India's very successful resilience against the US tariffs, much to my surprise, frankly, and I now live in South India, I work at the cutting edge of the economy, and the resilience has been amazing from Tirupur to even Andhra Pradesh, the shrimp industry. I was expecting a far bigger hit. So we shouldn't be hit more than, if nothing else happens, we shouldn't be hit by more than 0.5 percentage points, and that's more or less what he's done. On the other hand, there's no upside here. So it's going to be 6.8 to 7.2, downside to 6.8. Upside is we stay where we are this year.
So you're saying that things aren't as bad as we are being made to believe, at least by some within the opposition. I'm surprised, in fact, you mentioned Tamil Nadu in particular, because there are complaints there that in Coimbatore, there's a slowdown when it comes to textile, when it comes to diamonds. In Surat, there is a slowdown there as well, that workers are suffering. And yet you say that may be more exaggeration than reality.
No, workers may suffer, but your growth may still be high. If you can sell your stuff more cheaply, you may let go a few people or you may pay them less. Point is, you'll still sell your stuff and that will show up in growth, right? So I'm not talking about who bears the brunt of the tariffs. I'm saying at a macroeconomic level, India has navigated them fairly well. and the impact on the macroeconomy has been fairly limited. Yes, I agree about gems and jewelry, but frankly, I don't care.
But the growth numbers, you think this is realistic?
I think it's very realistic because I especially like the fact he's built in a downside. What I want to tell you viewers is 7.2 is where we are now. So he's saying it will be at least where we are now or a little bit lower. Not too much lower, definitely not higher.
Dr. Prasenjit Bose, still a bright spot.
Well, I would like to point out that the preface to the economic survey, which has been penned by the CA himself, that actually talks about a paradox. And he himself raises this question on behalf of the government, that if the Indian economy's macroeconomic fundamentals are so strong, high growth, low inflation, fastest growing major economy and so on, then why is the rupee declining? Why is the net FDI, continuing with its declining trend? And why is it the case that India's goods export, in contrast to services sector export and India's manufacturing sector, why hasn't it been doing well, and why aren't we being able to generate export surpluses, which is the bedrock of a strong economy and which can give you a more sustainable currency regime? And I think that one simple answer to this paradox, a probable answer, is because the IMF has recently flagged, and it has been flagging for some time, the quality of India's macroeconomic data. And I think that there is a strong case, especially when the government itself, the economic survey says that later in the month of February, both the inflation data and the GDP data are going to, a new series is going to be inaugurated and launched. So if that is the case, then I think that rather than celebrating the high growth, low inflation, this so-called Goldilocks phase of the Indian economy, we should also wait for the new series to come before drawing strong conclusions about...
Dr. Roy, would you like to respond to that quickly, that the shine may be more in the jugglery of the data than in actual economics?
Look, there is no jugglery of the data in the sense that it's not that some evil CA is sitting in a room like a wizard, juggling the data just this year. If you believe the data last year, you believe the data the year before, and you believe the data the year before that, then you have to believe this year's data. If we find that everything is not credible over the last 4 years, then, as Mr. Bose is saying, we will have to take that very seriously when the data comes out. But at the moment, there is nothing special in the data he's quoting that is any significantly different from last year or the year before, so I'll go with it.
And would you believe that? Or you still think there's a paradox there?
Yeah, I think, because you see, the government itself is saying that there is a paradox, and the point is that you just look at the difference. One example I'll cite. Look at the difference between the direction of change of the current prices GDP and the real GDP. And we may be underestimating the inflation rate of the economy. And we know that the IMF has already flagged that the use of the wholesale price index in calculating the GDP deflator and the process through which we are deflating the GDP is not followed anywhere in the world. We are quite behind. In fact, our base year is quite behind. We are still trying to navigate the economy of today.
More disagreement here. A quick answer to that, I'll come to Dr.
Wait a minute. Look, the thing is this, that we have been using the same methodology to calculate inflation earlier. So then we have to say that when we calculated the inflation was high, there was something wrong with the way it was calculated. Right. We can't just cherry pick and when inflation is low say that. I agree with you that there is a puzzle here as to why nominal GDP is so low compared to real GDP. But if that affliction is a multi-year reflection, it's not something that's just happened this year, right? So if you're going to change...
No, I'm not talking about this year. I am talking about this entire phase. That what we are celebrating, perhaps, is the fact that... See, it's not that India's growth rate right now is among the highest in terms of what was the rate during the previous government. We are celebrating the fact that it is the highest among all the major economies in the world at a time when all the economies are not doing well. So that's what we are celebrating. So I am saying that maybe we are also not doing that well, at least not as well as what our data seems to be suggesting.
I didn't say we are doing well. I just said the GDP numbers and the inflation numbers are not suddenly incredible this year. By no means I'm saying we're doing well.
Dr. Majumdar.
Well,
So when you have 5 economists, you will have 10 opinions coming in. So here I'll probably give another lens to it. And I think I'm more optimistic about Indian economy. Given the fact that if you just now a chart was shown about how economy has grown since pandemic. 5 years back, if somebody had told me that India will grow at 8% or 9%, it would have been unbelievable. But we have done that. Every growth number has beaten market expectations. So clearly there is a resilience in demand. There is a growth that we are seeing, and it is evident there in the numbers. 6.8 to 7.2 is a very good number for the next year, given that the uncertainty is now stretched for 5 years and may continue next year as well. Given the trade uncertainty that we are seeing, given the geopolitical uncertainties that we've seen, India has remained really resilient. Last year, at the beginning of 2025, demand was slowing down, and see how the policymakers have one after the other taken measures, bring on reforms, and very difficult reforms, by which and that's why we see a growth of 8% in the first half of fiscal year. And even if you walk around, if you go to the airports, go to the bus stations, you can see the vibrancy in the economy. It is happening, and the growth is still there. Now, I think what the government is going to do is improve the supply side of the economy. There's much been done on the demand side. Supply side has to improve, and that's where you will see the growth becoming much more broad-based. And once that happens, you will see a lot of private investments coming in, which has been been bit of a modest growth over there. Once that comes in, that's where we will see growth, not just 7.2, but much higher.
And that's what I want to bring in, Harshvardhan Gupta. Primarily this growth has been driven by public investment. Is this private sector participation, or rather the lack of it, that it's very modest, still a concern, a big concern right now for us?
Padmaja, thank you for having me. I must say that this economic survey is an excellent document, and we'll be unpacking it for the next few days because it's a long, big document. Private investments actually have done quite well. FY23, FY24, FY25. FY26 first half, there has been a bit of a slowdown. I believe because of the telecom sector 5G rollout having been paused or having been completed. So if you look at the numbers of the listed companies, it's not that the private capex has not happened. But at the same time, there is a paradox here as well. If you look at the RBI's capacity utilization numbers, they're still in the mid-70s. So I think the narrative is not entirely correct that private capex has not happened, but it could happen much more because we are still in the early stages. I'll just take a second to take a step back and say, fully agree that the numbers we'll have by the end of February would be different. The GDP base would probably be higher actually. It may go up by 5 or 10%, and we'll have a different set of debates at that point. Given the geopolitical turmoil and trade turmoil in the world, I fully agree with you, Padmaja, that 7 to 8% growth rate is very credible. And as the dollar cycle turns downwards, as the credit to GDP growth rate goes up, we are likely to see actually India's new trend or sustainable growth rate being higher. Even the economic survey has upgraded the midterm trend growth rate or potential growth rate of the economy from 6.5% real to 7% real. And I think I just remember even a few years ago, the discussion was whether it's 5 or 6. I have a feeling this will be further upgraded in the next 1 or 2 economic surveys. So I think India must get ready with the idea that the new normal is 7, 8, 8.5%. And that's not surprising because we are at the peak of our demographic transition right now. China had its demographic transition done by 2015. The dependency ratio bottomed out. Our dependency ratio, 25 to 65 age group, bottoms out around 2040 or so. So the next 14, 15 years are our peak years, combining with good trade agreements, good state capacity. I really liked Dr. Anand Nageshwaran's phrase of the entrepreneurial state, quoting the book by Mariana Mazzucato. That state capacity and to some extent industrial policy, along with free markets, is very important. As he said, Swadeshi is very, very relevant in a world where trade is at a premium and there is no neutral market economics. So we need to balance both free market competition and industrial trade policy. And I feel Indian growth rate will surprise on the higher side in the coming years. Given that the real paradox is we are seeing 6-7% growth rate having a very low deflator of 1 or 2%, whatever be the exact numbers we'll get to know in a few weeks. So imagine if the slack in the economy was lower, I suspect the real GDP growth rate trend would be higher. So we are actually seeing good numbers without hitting the pedal completely. So we are not going all out, and still we are seeing decent numbers, which tells me that as the cycle fully turns, we are likely to see better numbers, which is why the first decade of the millennium was better growth than the second decade, because that was the down dollar cycle, which allows for looser financial conditions. RBI can put more liquidity into the economy. It can buy dollars as opposed to selling dollars. So this is on and on a very macro stable economy, a very great document. And my only worry is that the government becomes too fiscally or monetarily cautious in the coming months and quarters. But there also, once on 27 February, we get the new GDP base number, the debt target of 50% for the union government to GDP, which is for 2031 fiscal year end, we may actually achieve it in 1 or 2 years. And the government will then have a runway to expand on the supply side, as you were mentioning. So very interesting times, and I agree with the other panelists. Let us wait for the budget and the 27th February, by which we'll get the new GDP series and the new CPI series.
Okay.
I don't speculate about the long term. Therefore, I will never use the term 8%. I'll join the chief economic advisor. There are enough people who do that, saying India is going to be great in 100 years' time. The next 3 or 4 years, the potential growth rate he's argued is going to be 7%. We are going to be in zone 7%. Everything that everyone else is saying about the wonderful thing that will happen to India.
What could happen?
Yeah, that's fine. That's okay. I prefer to stick to the next 2 or 3 years because we are pretty bad at predicting those. So there I'm happy. 7% is good. A low fiscal deficit is good. And I agree that I think the new GDP revisions will mean that the debt target will be much easier to achieve. So on macroeconomic grounds, I think we are okay, modestly so. Now, I don't want to do this jumping to we are going to become, very developed in 14 years or 10 years or 8 years or 5 years. We have lots of structural constraints, but things could be much worse. And I'm quite happy with the way things are now.
Okay, that in itself is good news. If we are happy, if we are satisfied the way that things are going right now, despite all the explosions happening around us. Samiran Chakravarti, along with growth, of course, is fiscal consolidation. The target is to reduce the fiscal deficit to 4.4% by FY26. Could this politics of state-level cash transfers actually jeopardize that?
The number, Padmaja, you are quoting is for the central government, not for the overall fiscal deficit. So the survey clearly points out that while the central government fiscal consolidation quality has been very good, not just the quantum of consolidation that we have done, but it has happened at a time when we have been able to expand expenditure on the public capex side and reduced expenditure on the revenue side. The problem, if at all, is on the state government side, where the state government fiscal deficit has consistently stayed elevated. Now, RBI is projecting that for this year, this can be even higher than the 3% of GDP watermark, which we thought was sacrosanct in the market, that this cannot be crossed. So in that sort of a situation, what is happening is that the state government finances, not only qualitatively, is challenging because of all these cash transfers and not enough money to be spent on capex, but in turn, this higher borrowing by the state governments is starting to impact the central government's borrowing profile as well, with generally interest rates in the system.
Because everyone wants a package, everyone wants a special package, everyone wants a bailout, everyone wants a handout, and we are now going into a situation where each one of these consecutive years is going to have big elections. 5 elections this year. Next year, you've got, I think, at least 4 to 5 elections. Makes one wonder that we are right now cheering on a bright spot if eventually we are hollowing ourselves out state by state.
So I think the one thing, apart from the budget, that we should be very carefully watching is the 16th Finance Commission recommendations, which are going to be tabled along with the budget. So I'm very curious to see whether 16th Finance Commission actually puts some safeguards around these cash transfers, gives a more reliable and more credible pathway for the states to bring down their deficit and debt. I think that will be very important in getting the investor sentiment also back, because today most of the fixed income investors into the country, they're worried that the state government financing can spill over into the central government finances, and that's why bond inflows have been very muted this year.
Dr. Bose, would you advocate that as well? That you should be more prudent when it comes to all of these handouts?
Well, I think that we have to look at the problem in a slightly, more holistic manner. Because the central government's election was over last year. So now they can, because if you are talking in terms of cash handouts, Mr. Modi has been very generous in terms of his handout, when it comes to his own handouts, in terms of PM Kisan and all the other BJP ruled states as well. Now, once their election is over, and you see, let us not forget.
It's funny you're calling them handouts. I thought it was social justice. All this while we were told it was social justice.
No.
But sure.
Listen.
Economic justice.
Well, economic justice, the main, I would prefer an NREGA kind of economic justice. What is happening there? You are actually, it is not a handout. You are giving jobs to people, manual workers, to the lowest rung of India's society, and now the central government is cutting their own commitment down to 60% and forcing the state governments to give the rest of 40%.
Dr. Bose, the fact of the matter is, look, nobody is going to bell this cat. Everyone's going to sit on TV around budget time and, hem and haw about, how the economy is a problem. But come election, everyone says, let's splash the money around.
No, wait.
And every single government, every single party does it.
If I can just come in here, there is a constitutional provision called Article 292.
Okay, just a second. 10
there is a
seconds
constitutional provision called Article 292, which empowers the central government.
What I am saying is, first of all, that I am not an unqualified supporter of cash handouts. Some of them are good, some of them are not. The women empowerment schemes are good ones, but the way you are just giving it away without any conditions, etc., I am not a supporter of that. But I am a big supporter of a program like the NREGA.
Okay.
And that is the point I am trying to make. That you are...
That's fine. That's fine. But fiscally, all I want to point out is that the central government is fully empowered to limit the spending of state governments using Article 292. I was myself part of that committee. There is a committee that sets these parameters based partly on the recommendation of the the current Finance Commission, and partly looking at it from the point of view of the Department of Expenditure. So if the states are going runaway, you can't completely absorb the center, I'm afraid.
See, I am making a slightly different point. My point is that if you are against handouts, then you curb handouts. But you have here a legislated job entitlement, 100 days. You are whittling away the central government funding, and then you put the fiscal burden on the states, and then you say that the states are they are having to borrow more. You are forcing the state. If a poll-bound state would always like to create more jobs to the NREGA, but now they have to shell out more cash, which will put them under more fiscal strain. Okay. So I think the central government has to be logically consistent. They are not being logically consistent. They are being arbitrary, and the way they are, if they are in the name of...
I think you mean politically consistent, because here is where political consistency is missing, both in the states and at the center. Pranjal Bhandari, apologies, 30 seconds, please wait for me. 30 seconds, I think Harshvardhan Gupta wants to respond. I'm coming to you after that.
No, I just want to say on NREG, it's actually better to spend money on various female cash transfer schemes and separate cash give-outs from asset creation. So NREG was a forced make work scheme. For example, if you, instead of giving them shovels, you give spoons, you can give jobs to 10 times more people. I have worked on NREG in the ground, and people would take money in the villages. In the night, secretly the JCB would come and they would do the actual work. So I am really in support of the government's reform of the NREGA program. It is good to do proper asset creation separately and proper cash transfer separately. Or more broadly, Indian government, center plus states, 80% of GDP, we are very much in line with where we should be. And if nominal GDP growth bounces back in FY26, compared to most other economies in the world and us growing faster, I don't think we should be that worried about the fiscal. I know it's not a popular opinion, but even including state debt, because the central government is doing much more capex than revenue expenditure compared to 10 years ago. So it balances out. It balances out.
Okay, Pranjal Bhandari, but still there are concerns that with the state's fiscal deficit at 3.2%, it is a concern for long-term financial stability.
Yeah, thank you very much for the opportunity. I think it's become quite fashionable to say that, states are doing all of these cash handouts. They are not disciplined. They don't have a glide path. But I think what many people don't see is that states have also been doing a lot of capex in the last couple of years. What we've been noticing is that some of India's laggard states, the low GDP per capita states, have done a lot of capex in the last 2-3 years, and many of them are actually growing faster today than some of India's leading states. And I think the public capex is something that really has, led the way. What is interesting in states is in the last 2-3 years, they've actually been doing both capex and cash handouts because they had the space to do it. After the pandemic, their fiscal deficit had fallen to about 2.3, 2.4% of GDP. They can run a fiscal deficit as high as 3. So they had this large room to ramp up, and they did everything. But they did capex as well, not just cash handouts. The next 12 months is going to be very interesting because the states have actually reached their upper limit, the 3% number. From here, they'll have to be a little more choosy. They can either do capex or they can do cash handouts. They can't do both in a major way. And that will be the real test for them. So let's not call them out right away because right now they've done both. The next year is going to be the time when we'll see who are the good quality states and who are the ones who are just frittering away money. But I don't think we should say that right away.
But Dr. Majumdar, let's face it. When it comes to politics, how many states do you actually think are going to go in the direction of capex instead of cash handouts? When it comes to sheer politics, it shows that voters much rather have money in their hand than something which is not tangible to them immediately.
See, somewhere I think the economic theory comes into the play here. Because when an economy has to, the government has to push the demand, you have to, and the private sector is not stepping in. That's when you give money in the hands of consumers, they will go and spend. Look at how consumer demand has actually pushed the growth overall. In fact, that is the 63% of your GDP. And if consumption is kind of offsetting all the negatives and absorbing all the negatives of export slowdown, trade uncertainties, geopolitics, then yes, it is in a way helping. But one thing is for sure, the governments who have been prudent about their spending, how they have allocated towards capex and cash handouts, that will determine how their long-term growth will actually translate into. Because the states which have been prudent, have been wise, they're growing faster, and even investors are looking into. You can see Orissa is one of the examples, how they have changed the game, how GCCs are entering in Bhubaneswar, right? Similarly, Coimbatore in Tamil Nadu. These are states where tier 2, tier 3 cities are growing. And why? Because there's been an ecosystem that has developed. This has come from the fact that policies have turned things around for them. Not all states are doing that way. Even Assam, like one of the states which is also attracting a lot of investments and also growing employment there because the policies are very, very much in favor of building that ecosystem. So clearly there are some states who have done really well. Some states may not have done that well. But overall, if the fiscal deficit is an indication to the global investors that government is in control of their expenses, and that's where the central fiscal deficit gets more attention, more right? Focus, yeah.
Yes. I just want to make one important point, I think. That it's not automatically true that people want handouts if you come to the more prosperous parts of India, where I live.
Okay.
At the pointy end, if you offer somebody a handout, versus, let's say, Awas, that's also capex. A house, affordable house.
Tamil Nadu had was one of the first few states where you actually had mixer grinders and refrigerators.
Yeah, but it didn't cost them because they're rich. Freebies. They're well off. You see, when states that are well off can afford all that. I'll give you an example. Last time I addressed Parliament every year during the budget, and the MP from Trichy was complaining his hospital didn't have a PET scan. And the poor chap in Bihar said, मेरे state पे तो X-ray machine भी नहीं है. So obviously, if your per capita income is going to be $4,000, you're going to expect different things. So they're not going to get handouts there for 5 rupees ka chini and 2 rupees ka dal. They're going to get mixing grinders if you give handouts, right? But the point is that there's a lot of scrutiny on whether that money that is used on capex is well spent. In Hyderabad, Dignity Housing worked and is working under this guy and didn't work with the previous regime. So voters are rewarding him for that. So good capex is rewarded by voters. That is a lesson I think many state governments in South India are beginning to understand.
Okay, I want to ask a question which actually right now is being asked in every living room. And to the layperson, the biggest concern right now is, and I want to start with you, Samiran Chakravarti, in a situation where you've been, slapped with tariffs by America, right now, do we have gloom and doom lying ahead for us, or are we doing okay, and will we continue to do okay? What do the numbers today tell you?
So, as probably Professor Roy was mentioning in the beginning, that our resilience to the tariffs have surprised the markets. 6 months back, if we were told what will be the GDP growth with 50% tariff, we would have probably painted a much more gloomy picture. We've showed some resilience, and that's because we have done a significant amount of stimulus push through the fiscal side as well as from the monetary side. So where I will put some caution is that, in my view, we are at almost max stimulus right now. Our ability to cut interest rates any farther is very limited. And similarly, our ability to do any tax cuts is also quite limited. We have done corporate tax cut, we have done income tax cut, we have done GST cut. There is almost nothing left to be cut anymore. So from that perspective, if something goes wrong in the global economy, then our ability to stimulate growth further through domestic policies, cyclical policies, is more limited. That's where I think the survey also is focusing more on the longer term structural policies which will change the course of the economy in a more, I would say, durable fashion, pushing towards more manufacturing growth through productivity improvement, etc. I think that's where the key difference is coming. We are understanding that cyclically stimulating the economy has its own limits. We have to now go to the next level. So I think the forecasted numbers from the survey of about 6.8 to 7.2% growth, our own forecast at 7.1 sits right in the middle of that forecast range. So that way it's not a kind of very odd assumption to make. But I'm quite conscious of the fact that we are at a very stimulated growth path right now. So future shocks will have to be treated very differently.
Ever since the 50% kicked in, the Prime Minister again and again, Harsh Madhusudan Gupta, has spoken of Swadeshi. And he talks about this at every platform. But is it really working for us on the ground?
I think it is, but very quickly, just a quick reaction to the last panelist. I fully disagree that we are maxed out on stimulus. I think reforms are always welcome, and we need more reforms. The deregulation commissions are there, but I think the latest core inflation numbers ex gold is like 2.5, high twos. The repo rate is 5.25%. Real rates are very high in the economy. There is a lot of slack in the economy, and the RBI has constantly been cutting its inflation estimate throughout the year as well as for next fiscal year. So to say right now that we have very little space left on the monetary side, I don't agree. And if you have space on the monetary side, you automatically end up having space on the fiscal side also, because the fiscal deficit is your primary deficit plus your interest expenditure. Now, in terms of the Swadeshi, you're absolutely right, Padmaja. I think it is working. What happened was a lot of the exports got rerouted because they're fungible. For example, shrimp, textiles, etc., to EU and other countries. And of course, now we are signing a lot of FTAs, more FTAs than the US. We are following that staircase model that Howard Lutnick spoke about. They are late, they are missing out. We did not miss out. But see, it's a very technical issue. Like, so Chinese manufacturing, US big tech, some agricultural sensitivities, you need to have some kind of industrial policies. But as a general rule, free markets and free trade works. So it's a combination of Swadeshi and free markets. It's autonomy, it's not autarky. So you don't close your market, you don't go back to the 1970s. But there are PLIs which you do. So subsidies work better than tariffs. Within tariffs, tariffs are better than QCOs, which are non-transparent, the quality control orders. So there is a graded way of doing things, and the government is fine-tuning that toolkit as we speak, because they've been doing it since 2017, 2018. And I think they're getting progressively better at it, and they're supremely pragmatic and non-ideological about it. So I think Swadeshi is a good label, but it does not mean 1970s. That was a very kind of cartoonish kind of license, Raj. We need much more of an entrepreneurial state right now, which I had mentioned, and this government is going towards that.
Dr. Majumdar.
Yeah, if I may come in here, the one aspect is very clear that given the geopolitical uncertainties that we're seeing, in some critical and strategic sectors, we really need to be self-reliant. because we are getting arm twisted, be it energy, be it semiconductors. We cannot remain dependent on other nations, or especially in areas geopolitically uncertain. So those are the sectors especially where we see that if we have to move up the value chain in digital infrastructure, we cannot be dependent on one nation where we have 75% of our infrastructure is coming from there, right? Or energy. If we want to build our data centers, we will need huge amount of energy. But if we say that we have to import fossil fuel from certain segments, from certain areas of the world which is not geopolitically stable, then clearly in that case it becomes a problem for us. We need to build our renewable energy sources and make sure that we transition there as quickly. So certain sectors, defense again, another sector where we need to be much more self-reliant. So Swadeshi doesn't mean that we go all out, but at least in critical and strategic sectors, we need to be.
But has satisfactory progress taken place there? Because Make in India has been questioned again and again. It has been a slogan for the last 12 years. Is the progress up to the speed, enough to offset the kind of problems that we are seeing?
So these are the sectors where investment has a gestation lag. You invest and you see the returns coming after 5-6 years. Yes, we have started the momentum, but it will take some time for the returns to see. And you are seeing that PLI scheme was announced in 2020. Now we are seeing the outcomes of PLI in certain segments, right? So it takes time. It takes time especially in a country like ours where policy implementation takes time from when it started, right? So I'm sure in the next 4-5 years we will see the results of whatever the policies that we have taken so far.
Pranjal Bhandari, so far we seem to have ridden out the upheavals thanks to the American president. But any significant issues that you think India must watch out for fear of being complacent, for fear of, sudden shocks that we might get, any particular factors?
Actually, to the contrary, I think this whole 50% tariff shock has really, goaded us to do a lot of reforms, which we were really doing very slowly. Like, for example, in the last year, we've gone ahead and signed FTAs with so many countries, EU, UK, New Zealand, Oman. We've taken away our quality control orders to some extent. We are trying to bring down our customs duty. I think today's economic survey did very well in saying that we need to put exports at the heart of strong medium-term growth. And I think this external push, integrating more with the global economy, was something that was missing over the last, I would say, 10 to 20 years. And I think that's back in the play. Let me just, take 20 seconds to say that why is exports important? For the last 10 years, we have all lamented the fall of corporate capex in India. Many other capex like construction and government capex has been going up, but corporate capex has been falling, and the government has bent backwards to reignite it, from corporate tax cuts to even consumption stimulus to basically public capex crowding it back. Then there was a time we were thinking that when balance sheets get cleaned up, it'll come, but nothing turned it around. And I think the missing magic that time was the fact that our exports were falling. Goods exports as a percent of GDP have only been falling over the last decade. Rarely ever you see investment rise in a major way in countries where exports are actually falling. So from that perspective, the fact that we are now thinking about exports so much more seriously than we have ever done in the last decade or so, I think that's great for investment. Why is investment important? Because it increases the capacity of your economy to grow jobs and to increase wages, and then you get into that virtuous growth cycle. So I would say that we've been voted into doing the right thing, and I'm really happy for that.
Dr. Roy.
I wanted to say I agree with everything Pranjal says, except that India's share of world exports is still a fairly miserable goods exports, 1.8% of total exports in the world. Okay, so anything we do to move that needle is not going to sort of have a major impact on economic transformation for quite a while. Again, the people who like to talk about 2047 are welcome to do so. I'm talking about the next 2 or 3 years. Now, one important thing that has also happened with the tariffs, which I've personally seen, it's been my big grouse about the Indian economy, that we can make shirts like I'm wearing, 3,000 rupee shirts. But we can't make 200 rupee shirts. We import those from Bangladesh and Vietnam. It's ridiculous. This time, for the first time, when I went and spoke to textile manufacturers in Tirupur, they in fact called me and said, we need to learn more about how to make these shirts. And it's a very simple truth about, if you look at China. China sells to the world because it sells to its own people cheaply. We have not been doing that. So we are selling sort of suit boot stuff to people who can afford suit boot stuff. We're not selling stuff, we're importing stuff that common people use. That, I think, will change if the President of the United States continues to do us a favor and keep the global environment unpredictable. And that, I think, will be excellent for Indian exports.
You know, I have to say that when you started by saying, Dr. Rumki Majumdar, that you put 5 economists in a room, there'll be 10 opinions there. It has unanimously been a rather positive opinion that only good has come from what Donald Trump has done to India. And think about, and I was about to come to you on that. Yes, go on, Dr. Bose.
You forgot the lonely voice of dissent. I think that first of all...
No, I was waiting for you to stir the pot, which is why I was just creating the mahal for you to get into it.
Well, it's not about studying the pot. I think that much of this complacency that we have been very resilient and so on, whereas the entire global economy is in a turmoil, I think is slightly premature. I think a lot of export and trade is happening because of the front loading. It will have a lagged impact. The economic survey indicates that. But I want to pose 2 simple questions. See, even if India becomes by 2030 or whatever these goalposts or these benchmarks that the government sets, the largest economy in the world, so what? So what? We have the largest population in the world, the largest number of poor people in the world, the largest number of unemployed people in the world, the largest number of unemployed graduates in the world, and our per capita income is it is absolutely lowest within the G20 countries, which are our peer group. Now, in that kind of an economy, if we are basically thinking that this 6%, 7% growth, this is enough, and we are
very
going
quickly, Harsh, please.
Transition, I think it is absolute, insensitivity or cynicism.
Harsh.
We should understand that this growth is not generating an adequate job, which the economic survey itself pointed out. The economic survey itself pointed out. If through the last 2 years of economic survey pointed out that this
at one point in 1991,
Yes, go on.
We were ranked number 13 in all over the world in terms of GDP. Right now we are number 4, very soon number 3. So now it is very convenient to say, okay, if we become largest, then let's focus on per capita. Of course, we have to go to per capita. But to go to per capita, first you have to become the largest or near the largest.
So by that time, China has become number 2 and also not the last in terms of per capita. You have a comparison. You make comparisons.
Yes, because China had a very steep demographic transition. Its dependency ratio bottomed out in 2015. We are doing a gradual demographic transition.
But they had more population than us.
And remember, while just
for a very long period of time.
Can I conclude by saying that let us not look at only the market exchange rate numbers. The PPP numbers are what they are. The rupee is undervalued in a fundamental sense today. To be fair, so is the Chinese renminbi. Right now, we are near the dollar peak in a 15-year sense. So a lot of numbers look much worse than they actually are at market exchange rates.
Okay.
And we don't have the most poor number of people in the world. That title belongs to Nigeria actually. India actually has number 2 in terms of the number of absolute poor, depending on how you count the poverty line. So of course we have to grow the economy. It has to be larger in aggregate and then per capita. There is nothing new in that.
You know, your question was, what is the point even if we become the largest economy? The answer to that, very humbly from a layperson, is, Dr. Prasenjit Bose, that it's much, much better than being a dead economy, as we have been made to believe by some.
When was India a dead economy? India was never a dead economy.
But sir, we have many leaders in our country who are saying that the Indian economy is dead, and everyone, barring the Prime Minister and his finance minister, know that and believe in it. Anyhow,
let us not get into this hyperbolic political kind of things. If we are seriously debating this issue, my humble question is that is this 6%, 7% growth rate enough to make a transition into even a moderately developed economy?
Okay, and let's wait for the finance minister to answer that question.
I think Mr. Roy himself has written that we are into some kind of a low-level trap. We have got trapped into that, and now we are celebrating that. And whereas unemployed remains without jobs, the poor people remain poor, and we are just celebrating in our own echo chambers.
I agree with you.
That is what I am being critical.
I agree with you. I don't think 7% growth is going to get us to all these pompous things that people say about 2040, 2050, whatever. But that doesn't mean I won't celebrate it, because I have a very low opinion of the way in which these things have been managed in the past. So the fact that we are sticking around at 6.87 is good enough for me. I have vastly moderated my expectations about India. I look at us like Thailand a little bit, frankly.
All right. I'm completely out of time, I'm afraid, at this point. Hopefully, all of your questions will be taken up, heard right here, Dr. Bose, and answered by the Finance Minister. For the time being, though, all gentlemen, Dr. Runki Majumdar and Pranjul Bhandari, thank you very much for joining us here on NDTV.